everyone. Shannon Smith from Smart Business Solutions Financial Planning. I want to talk to you today about what is a managed fund, because there's going to be a few different terms we go through when we relate to investments. So I want to go through what is a managed fund. So a managed fund, let me turn over, you're going to go across, there we go. It's basically when you invest in a managed fund, your money is pooled together with other investors, and then the fund manager buys and sells assets such as shares and bonds on your behalf. So you don't actually own the underlying investments, you own units in the fund. And the value of units in the fund will rise and fall with the value of the underlying assets. So if that fund manager invested in a whole lot of international shares, Australian shares, and was trading them, your unit in that, depending on how many you own, you will be the value of your unit will go up and down. And some of the managed funds also pay income and distribution. That will come down to the investment strategy that you're looking at for investing in the managed fund, what your investment strategy is as to whether we're looking at managed funds that are going to that are focusing on capital growth versus managed funds that may be focusing on getting the underlying income return. So that's what we're looking at with those ones. So there are a few different types of funds out there. So there's thousands of managed funds to choose from, let me tell you, and that's something we can do for you. But it's important to understand the different types of funds, the risks and returns so that you can choose the fund that best meets your needs. So the different types of funds are, there's a single asset managed fund, and there's a mixed asset or multi-sector managed fund. So they're the types of them. So a single asset managed fund is where they invest in basically a single asset, such as shares, property, or bonds. And so some of the main single asset managed funds that you can invest in would be like a cash fund, might be a fixed interest or bond fund, mortgage funds. So they invest in property loan mortgages. Some funds are high risk. The risk depends on the quality of the borrowers and the purpose of the loan. And then you receive an income as long as the borrower pays interest, but your investment doesn't increase in value. It can fall in value if the borrowers don't repay, but it doesn't increase, but you get a good return on your money. So that's one that we would look at as an income focus rather than a capital focus. Property funds could be that they invest in residential property, commercial property. It could be like, your shopping centre. Often a lot of your local big shopping centre, the mall strip, might be owned by a property fund manager. And you're not guaranteed, obviously, a return of interest, but you will most likely get the capital growth potentially, and you will get some return on it. But the only challenge is when it's in a property fund, you're not going to be able to get the money out too quickly. It could be that they're in shares, so a share fund, listed shares, and it could be an alternative investment such as hedge funds or private equity or something else. So that's where the fund is invested in a single asset. The other type of one is called a mixed asset or multi-sector managed fund, and that is where the fund invests in a range of investments. So they're labeled based on their types of investments that make up the majority of that, and that will come back to what your risk profile is. So there might be a growth fund, a balance fund, conservative, and a cash fund. So let's just say it's a growth fund. So you are a growth investor. Then 85% might be in shares and property, so growth assets. The rest will be in cash and fixed interest, and basically that you'll be looking for a higher return from those ones. There is always a risk of a loss there, so it depends on this one comes very much down to what your risk profile is and your appetite to risk on it, and so that would be a mixed fund from that perspective. So how do I do the research for you? Now, if I've just told you there are thousands of managed funds, basically what I need to look at is your goal in investing. So what are we hoping to achieve? Do we want capital growth, or do you need income because you're about to retire and we need return and income? What's your risk tolerance? We want to make sure you're always sleeping at night. You're not worried about your investments. Your intended minimum and maximum amount of time you intend to invest for, because that will dictate the type of investment I'll be recommending, what assets the funds will invest in, the fees. I do look at the fees because some fund managers, they're getting paid for managing it, depending on the fee. So I really do focus on that as well. The risk of investing in the fund and the benchmark or target return that they're expecting. So we do research to see the track history of the fund as well and what they've done in the past. So buying units in a managed fund, when you invest in a managed fund, you're basically buying units in the fund. The number of units you get depend on the amount at each time that you invest, or the price at that time. The unit price changes depending on the value of the assets that you invest in. So often a lot of these types of managed funds will need at least 5,000 as a starting. You can have unlisted managed funds. So most fund managers are not listed on the exchange. You buy units of the fund through an application form to the fund. There can be some that are listed managed funds, which you then do that through the stock exchange, such as the ASX. And buy those through those. But that's something obviously that we can facilitate and assist you with. Now, withdrawing money from the managed fund, they can have fees or restrictions on when you withdraw the money. Some funds won't allow you to withdraw the money until a certain point in time, maybe say 12 months. Other funds may freeze or stop withdrawals if they don't have enough cash. Maybe they've invested in something else. They may limit the number of units you can cash out if a lot of investors are trying to withdraw money at the same time. And the withdrawal rights will be outlined in the fund's PDS. So this is where we assist you to understand what are your investment goals so that we make sure that what we recommend to you is actually going to be consistent with that situation. So if you have any questions at all on managed funds, please let me know. Now, we do have some other videos where I'm going to talk about managed accounts, and then I'm going to go through the difference between managed accounts and managed funds. So look out for those other videos as well.